Welcome to the February 20th, 2023 Advanced Report for McGowan Group clients and NetWorthRadio.com listeners. Thank you for tuning in. I'm Spencer McGowan, your financial weatherman with your global fast-paced tour of, yes, the weekly headlines, but I got a bunch of surprises in here and some good news sneaks up on the economy. So I'm going to cover what snuck up. I'm President, McGowan Group Asset Management, a team of 10 providing wealth management services as advisors to affluent families. We're based at the Crescent in Dallas. Be sure to subscribe so each week you can get the update. And this is the kind of amazing update that the team of 10, the team that cares, is bringing for our clients each and every week. We want to put right in front of our clients exactly what will help you make great decisions. How many times has everybody heard the word recession? And it wasn't like a if, it was like when. And it was a hard landing, soft landing. Hard landing means the economy actually contracts in dollar terms, but then soft landing would be something modest where we don't even recognize it. Well, I'm going to cover the forward forecasts and how they've changed this week dramatically on that recession topic. Now you can worry, you get to pick one. If you want something to worry about, you can worry about a recession. Okay, that's always bad. People think 2008 and the banking collapse and everything. So you can worry about the recession, or if you want to worry about something, you can worry about the Fed tightening even further, and that'll cause a recession. Okay, so you get two things. You got to pick one thing to worry about the most. Well, that may not be the most important thing, and this is proof. Atlanta Fed Real GDPNow. Last quarter, we said all the economists are down here on how the economy's doing, and everybody's whining about it. Well, actually, the Atlanta Fed takes all the data every week and updates where they think economic growth is right now. A recession would be a negative number, but last quarter, they were the most accurate. They said about 3%. The economy comes in at 2.9. That's a wow. And all the economists were down here, all pessimistic and talking about recession. Well, what's actually happened? Here's the blue line. That's the consensus estimate from all of these learned economists who were too pessimistic last quarter. Well, we're already halfway through the first quarter. How are we really doing in the U.S. is important. Well, look at this. All those learned economists, their consensus was below zero. That's recession, right? That's what they were saying. The most accurate measure is Atlanta Fed based on our experience and especially based on last quarter. When I printed this for the broadcast, it was 2.2%, which is positive economic growth. Actually, then it updated over the next 24 hours. It went to 2.4. And now it's 2.5. You can go Atlanta Fed Real GDPNow and it'll come up on your browser. Well, that means good news is sneaking up on us about the economy, even with the Fed having done a historic tightening that puts the rates the highest they've been in 16 years. Wow. What's this? This is retail sales. So look at this. That's the highest, that's 3% in January, was the increase in retail sales. That's the best increase since March of 21, right? Here's all the other numbers. What does that tell us? Well, all those idiots, those people that went out and bought stuff, apparently they don't know about the recession. Somebody better tell them. And that is not a recession, okay? What happened here? All the HR departments around the country hiring net new jobs. 517,000 net new jobs in the month of January. Somebody better tell those people there's a big recession out there because apparently they don't know. Wow, that's a strong economy. That's actually really good news. And it's bad news because then the Fed's going to tighten even further and then we'll have a recession. I guess you can, now you can worry about both things. And I'll show you something about the market that'll surprise you. Now, here was the inflation number, 0.5%. That would annualize at about 6%. Okay, that means inflation is sticky. All right, so if the Fed goes to 5% and stays there for a while, that's probably the right thing to do. And it's not a surprise to the markets, and I'm going to show you why here in just a second. So look at this. What happened here? This is high inflation in June. Well, it would annualize like at 15 or 17%. That's like the 1970s. Run in circles, scream and shout. But then what happened? We told you in this broadcast, this is why you want to subscribe, and if you hit the like button, that's good too. Well, right here, commodities came down, and we started saying right here, oh, lumber per 1,000 board feet has gone from 1,700 and it's coming back below normal, and it did. Well, look at this. Take all this months, including January, which is a little elevated. Do you the math for the 7-month total. You get 1.4, divide by 7 months, multiply by 12 months, and you get annualized 2.4. That's really not that bad inflation. It disappeared in June, and these big months are going to drop off of the annual total. And that should be good news. Now, when you see a big jobs report and everybody's worried about the Fed, and then the Fed's going to cause a recession, anyway, the Fed's going to increase rates. That's what everybody's worried about. And you could see January, some of that happening right here with that big drop in the Dow. This is Dow year to date. We've been remarkably stable on both the Dow and the S&P. My market reports, I'm having to search for material. Well, we've got good economic news, but if I'm reporting just what the market does, it's like the Dow's still at about 34,000, maybe a little below, and the S&P still at 4,100. That's been true all month. It's remarkable stability. Now there's the S&P, and its stability right around 4,100, also in February. That's notable because it means volatility has disappeared. These spikes indicate institutional big selling of equity, right? 37. Now you're down to 18 on the volatility index. That tells you things are remarkably stable, the economy's pretty good, and the Fed's almost done with the tightening cycle. Wow, that's a pretty good environment for 2023, at least so far. I'm Spencer McGowan, President, McGowan Group Asset Management. If you go to networthradio.com, that has the rest of our website as well. What you'll see is the ability to contact us, set your time for a brainstorming session, and we're going to update your plan right there in the Zoom meeting or in your office tour, and you'll get an updated plan for 2023 with math that is really based in cash flow. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.